Do you make these mistakes when using a currency strength meter indicator? If you Google currency strength meter, it returns 8.3 million results. Crazy. And you know what's crazier? Almost none of them tells you the pitfall to avoid when using a currency strength meter. That's why traders lose money even with a GPS in their hands. So here are the mistakes to avoid when using a currency strength meter, the stuff nobody tells you. 1. You randomly use a currency strength meter without knowing how it works. Now, a currency strength meter is like any other trading indicator. There's a formula behind it to determine the strength, weakness of a currency. But if you don't know the formula behind it, how can you trust the result of the currency strength meter? What if the formula is wrong? What if the currency strength meter only works on the daily time frame but you're unaware of it and use it on the lower time frame? That's why no matter what tools or indicators you use, you must always know the formula behind it and how it works. 2. You use the currency strength meter to time your entries. Now, a mistake many traders make is to blindly trade based on the currency strength meter. For example, you identify what's the strongest currency pair right now and immediately buy, thinking the price will move higher. Big mistake. Here's why. A currency strength meter isn't meant to generate buy, sell signals. It only tells you which are the strongest, weakest currencies at a point in time. Let me explain. According to this currency strength meter right now, JPY is the strongest and GBP is the weakest. But if you look at the charts right now, it's a bad time to short the GBP, JPY. Why? Because you're chasing the markets lower after it has made a big move. There's no logical place to set your stop loss and you'll likely get stopped out on the pullback. Next. 3. The lower time frame is prone to false signals. Here's the thing. Most currency strength meters calculate the change in price over a fixed period to determine which currencies are strong or weak. But this is prone to false signals on the lower time frame. Why? Because high-impact news can cause a spike in the price which misleads the strength, weakness of a currency pair. That's why you want to use a currency strength meter which calculates the change in price from the higher time frame. And here's how you do it. How to use a currency strength meter and find the best currency pairs to ride massive trends. Here's how. Use the currency strength meter and pair the strongest currency with the weakest one, so you get a strong trending market. For example, look at this currency strength meter. You can see GBP is the weakest and JPY is the strongest. And when paired together, you get GBP, JPY which is in a strong downtrend. Remember, a currency strength meter doesn't help you time your entries. It helps you filter out the best currency pairs to trade. This means you need a trading setup to get you into a trade, like breakouts, pullback, candlestick patterns, etc. If you want to learn how to time your entries, then check these out, my next episode.